Everybody, it's Brian Shannon from Alphatrends.net. Today is Thursday, the 6th of April, 2023. The market is closed for Good Friday tomorrow, so we have a three-day weekend to enjoy. The markets were kind of all over the place here. You know, the S&P, if you just look at that, it was barely down. NASDAQ lost a little bit more ground, and surprisingly, they were only down two-thirds of a percentage point with the semiconductors down 4%. The big winner this week was oil. Oil was up 6.5%, so energy names really lagged behind those, though, only up 2.6%. So, you know, you've got to trade each stock on its own merits. It doesn't matter what the index always does, but we always focus the weekend video on the indices and all of the stock ideas I leave for subscribers to Alpha Trends each and every day. Let's start the week out with a look at the longer term chart of the S&P 500. This is the weekly chart, and you know we have a pattern in here, and you know the definition of a trend is well, downtrend, of course, is lower highs and lower lows, and this market stair steps lower like this. Then the pattern for an uptrend is higher highs and higher lows. It doesn't mean we're always going to have just a quick, easy flip from bullish to bearish, though. As I've said from the beginning of the year, I think that this year is a market that if they didn't scare you out last year, they'll likely wear you out. Now, that could change, but we're still stuck below the anchored volume weighted average price, that purple line, from the all-time high made last year. When I look at this weekly chart, yeah, it's bullish, but look at where we've come 4 weeks in a, 4 weeks up. It tells me, normal trading would look something more along the lines of this before it would continue higher. And who knows, if it was to pull back like this, it doesn't mean it would continue back higher. But we have to always keep that bigger picture in mind when we look at these shorter term time frames like the daily time frame on the left and the 30-minute time frame on the right. So here's that most recent rally in those lines that I had drawn in. If it was to pull back like that down towards 400, it wouldn't destroy this market. We have a rising 200-day moving average down here. That's a very good sign. But markets don't just continue to go higher. They need to refresh. Now, it looked like maybe this week we were going to see a little bit deeper pullback. Instead, we saw that we still have a rising 5-day moving average. So as you know, I always talk about the intermediate term trend as innocent till proven guilty with a rising 5-day moving average. We came right down to the anchored volume weighted average price from this gap, couldn't close below it on these 30-minute candles. So these are 30-minute candles here. This 65 period moving average is the 5-day moving average, and I talk about that calculation all the time. If you're not familiar with it, just type into Google Alpha Trends 5-day moving average and you'll find about 20 results. Anyways, so for next week, it's encouraging that we hold above there. I think that as long as we hold above 405 and a half or so, that this market will continue to consolidate around that all-time high anchored VWAP. But if instead we see something like this and get trapped below it, then perhaps, then we will see the 5-day moving average decline, and then perhaps we'll start to see some other levels tested on the downside. I'm still a little suspicious of this market in the near term because we've had this big rally, and it's maybe in need of some price time correction, but so far it's turning into a time correction. A time correction is always more bullish, but the fact is we need to remain above that 405 and a half in order to remain healthy in the intermediate term. For the NASDAQ, let's look at the weekly time frame there as well. So as we know, we've spoken about this before, we broke the downtrend line. Now, breaking a downtrend line doesn't mean it's an automatic reversal to the upside, but in this case, we also saw a higher high there. And as that made that higher high, we saw a low. That was a low that was higher than the previous one. Now we have another higher high, and that is above the anchored volume weighted average price, that purple line from the all-time high. So, the buyers are in control here. We have a rising 10, 20, 30, and 40-week moving average. Those are things you want to see in an uptrend, but it doesn't mean you just want to buy after these rallies like we've seen here. You have to ask yourself, where has it come from? When you see these types of rallies, it's easy to get excited, but what typically happens is that we need some kind of pullback to make another higher low in order for this to be able to continue in an uptrend if that's going to happen. That's not a prediction, but that could be the way an uptrend would emerge from here. But I think we still need a little bit of a correction through price. So here's that daily time frame. I'll erase those lines that I had just drawn in. The level I'd like to see it pull back down to is the anchored volume weighted average price from the March low. If it was to do that, it would get it down towards this, you've got to remember that's moving as well. So maybe down towards the 310 level. And it seemed as though maybe that was going to be the case. But with that rising 5-day moving average, it didn't pay to get short. We saw this little breakdown, but it recovered quickly. Next week, what we want to see, is for this level to hold. If it were to do this and then break down, I think it would be very easy for this market to pull down towards the 309 level, and that would give us a healthy correction on the weekly time frame that would kind of help refresh the market. Looking at the Russell 2000 on the longer term time frame, if they didn't, this was a big bull trap, and if they didn't scare you out during the decline, well, there's most likely wearing you out in here as this market does nothing almost for the last year. I mean, this was basically when was this? June of last year. So from June of last year up till today, we've basically done nothing in the Russell 2000. It tried to break out over here, as we know, and that failed. Here's the anchored volume weighted average price from the all-time high. So look at where we were at that point where it broke out. I'll put that box back on there at that breakout point, and it's the same thing. It was extended at that point. So we don't want to buy after these multi-week rallies. That's when most people, amateurs get excited because they see all these stocks moving. And what you want to do instead is look at it and say, I want to play a strong defense. It made an inside week, another inside week, and then it broke down, and it's been lights out since then. Even on this weekly time frame, you can see we have a declining 10, 20, 30, and 40 week moving average. This market is still broken. It's stage one accumulation at best. There is, and at worst, it's still maybe in a downtrend that sees something like this happen, traps the shorts down there, and then gets ready to move higher. But basically, it remains a complete waste of time for a longer term time frame. If you're a shorter term time frame horizon, we're still stuck below the anchored volume weighted average price from this late March low. So it's going to need to get back above there just to become neutral in the near term. So again, Russell 2000 I think is a complete waste of time. The semiconductors, let's again start with the weekly chart. This is a bullish market. We've seen that the pattern of lower highs and lower lows switched from, made this high, then it made the requisite higher low, and it confirmed the uptrend with the higher high here. Now, I would have suggested not buying in this area. It doesn't mean it couldn't have made money. What it means, though, is a lot of times you just have to be very defensive. If you're going to buy in that area, have tight stops. Don't buy it on a weekly chart. Buy it on the shorter term time frames. Now, this market has seen, again, the volume, not the volume rather, but the price action has slowed down. That it tells me it's maybe a little bit vulnerable for a little bit of a pullback. The daily time frame is still bullish, however. We still have a rising 20 and 50-day moving average. I'm only suggesting caution. I'm not saying run out and short this thing. That would be foolish. You don't short with confidence and just like we anchor volume weighted average price levels from these lows, we can draw trend lines off of them as well and see how that provides structure. So when we anchor to this point, you can see it touched here. So we add another anchor. And this market is trying to hold at that level. So let's go back at that on the 30-minute time frame. Here's that 30-minute time frame. Now, in this case, we have a declining 5-day moving average. So we're fighting with this level. If it breaks there, then it's likely to come down and test either this 50-day moving average at the blue line. But I think that the easier money for a little while has been made in the semiconductors, and you don't want to be buying pullbacks in those. Not yet. Not until we see the 5-day moving average start to flatten out. And again, you could have said, hey, well, I would have purchased here, but you would have said the same thing right here, and maybe you got lucky with a gap, and maybe you do again. But it's about odds and consistency. And if you're consistent, if you're looking for consistency in the market, you realize you're going to miss some trades where they gap higher, and that's just part of the business. What I'm interested in is consistent low risk entries, not consistently, hey, I get lucky and buy the dip and it works for me, because we know what happened to the people who tried that strategy in 2022. All these pullbacks were ended up being, the direction of these lower highs. There were lower highs and lower lows, which was just a horrible downtrend. It wasn't a pullback at all, and it wasn't a strategy to buy the dip because it wasn't a dip, it was a smashing. Speaking of smashings, let's look at the weekly chart of the financial stocks. Just a mess in here, and where it came up to on this most recent rally, it found resistance at the prior support. Support broken tends to act as resistance. Now, I wouldn't have expected this to occur, but it did occur, and that's why we're cautious when it gets up. Again, after we've seen these multi-week rallies, we want to get cautious as it breaks out. Which, you just look at this weekly chart and look at this so-called breakouts here. Well, we broke out at this point, then we broke out at this point. So let's just circle that. We broke out right here. How many people made money on the breakout? Realistically, how many people made money on this breakout right here? Buying breakouts is a horrible strategy if you're buying them after several weeks of an uptrend. What you want to look at and say is, well, when it breaks below these volume weighted average price levels, then we've got big problems, and we still have big problems in the financials. If we back it up to a longer term chart, it's trying to find buyers in this area. There's nothing here to suggest or that tells us this will hold. It's possible the financials could go into multi-year trouble. I'm not making a prediction, but I'm looking at it right now on this daily time frame and saying we're still finding problems with this declining 20-day moving average. We have a declining 50-day moving average and a declining 200-day moving average. The SIVB debacle came right here, and guess what? We found supply right at the anchored volume weighted average price from that level. Not a surprise. On the 30-minute time frame, we're still kind of holding up in here for now. But if we start to see something like this next week, one, I wouldn't short a breakdown, but I would look for a breakdown below this VWAP, a rally up, and then look to short it over here, and then expect the next one to break down and perhaps even go down and test the lows, similar to the way the regional banks are doing in here. The regional banks, they're where the bigger trouble is, of course, and here's where the Silicon Valley bank problem occurred, and we've been stuck well below that VWAP, and we're close to new lows in here as well. Looking at the weekly time frame, this group is, I think, going to be left for dead for a while. There's still big issues in there. They've broken a lot of trust, and it's going to take time to heal. I don't know why my 30-minute chart, there it is, but here you can see this right here, this anchored VWAP is from this low right here on the daily time frame. So what we're doing is just taking a closer look at that action, and we saw some distribution in that area, and then it broke a lower low below the declining 5-day moving average, and then there were problems. Now it's in a little bit of a bounce mode, so I wouldn't want to short this market again until it started to do something like this. This VWAP comes up like this. Maybe this stock, maybe this market does a little bit of this, comes down, and then breaks down. That's where I would be interested in shorting it, because if it rallies up like this, who knows? Maybe it's just going to run right up to that anchored VWAP, pull back a little bit, and continue to move higher, and the 5-day moving average comes around. But my daily time frame tells me we're still guilty till proven innocent. Maybe you think this is the low, so perhaps you're looking for that type of purchase. I don't know what's next for this, but I do know that there's still a lot of problems in this industry, so I don't want to be a buyer. If you're watching this on YouTube, please give it a like. Leave a comment. I read them all. The energy names, again, were the big winners this week. Let's take a look at the chart of the crude oil. And here, let's just take a look. There's Bitcoin still stuck underneath that volume weighted average price, anchored to the all-time high. So if we just kind of move stuff around here to adjust the scaling so we can see it, there's the all-time high. We're still stuck below that. I would still prefer in Bitcoin for us to pull back down, maybe test this green anchored VWAP, but let's talk about oil, because that's what we're looking at. This market came close to the anchored VWAP from the low that it made in 2020, and it spent a couple days under there, and the scaling gets tough in here. But anyways, we saw this huge rally in oil this week. I would expect that if it's going to continue to rally, it's going to encounter some resistance up near that 85 level. But right now, it's showing no signs of breaking down. In fact, if you look at, I'm not familiar with the trend tools very well on this platform, which is TradingView. But here we are, stuck still maybe below this prior band of resistance. So a nice thing for oil would be maybe it pulls back a little bit, and then after that, then it continues up and goes to test this level. Anyways, that's all I have for now. We have a long weekend. Enjoy your time off. Don't obsess over the market. Have a good weekend.